Good morning. Welcome back to the War Room. I am Malik. Today is Wednesday, April 8th. Yesterday, the KSE-100 index experienced a moment of absolute silence. After days of violent, face-ripping volatility and a catastrophic 520 rupee diesel shock, the market simply stopped. The index drifted upward by 466 points, closing safely above the 150,000-point death line at 151,673. Right now, the timeline is split. Half the market thinks this is a dead cat bounce before the final collapse. The other half thinks the panic is over and it is time to buy the dip. I am telling you to ignore both of them. We are not in a recovery and we are not in a trap. We are in the eye of the storm. The blind, mechanical panic selling has temporarily exhausted itself, but the fundamental economic damage has not even begun to hit the balance sheets. Today, we are going to dissect the anatomy of yesterday's volume collapse, and I will show you why the institutional money has completely paralyzed itself while it waits for the insurance and telecom sectors to report the true cost of survival today. Let us analyze the pure tape mechanics of Tuesday's 466-point drift. Look directly at the participation. The main board traded just over 357 million shares. Earlier in the week, we saw 500 million to 670 million shares being violently exchanged. A drop to 357 million shares is not a recovery, it is a state of institutional paralysis. The smart money is currently sitting in repricing purgatory. The forced liquidations have paused, but no portfolio manager in their right mind is aggressively buying cement, auto, or transport stocks when diesel is sitting at 520 rupees a liter. They are holding their cash, running their spreadsheets, and desperately waiting for the corporate boardrooms to tell them exactly how bad the Q2 margin compression is going to be. When a market goes quiet on low volume during a macroeconomic crisis, it means the floor is incredibly fragile. The 150,000 line is holding purely because the sellers took a day off. If today's corporate board meetings signal systemic distress, that floor can vanish in minutes. The spreadsheets are about to meet reality. Today, Wednesday, April 8th, the PSX calendar is forcing the insurance and telecom sectors to publicly price in the diesel shock. Mark your screens. 10 a.m., Jubilee General Insurance Limited, holding a mystery non-financial meeting in Karachi. Let us talk fundamental risk. When transport and replacement costs double overnight, insurance premiums must follow. Jubilee is meeting today to recalculate their corporate risk exposure. If they signal a massive hike in premiums, it acts as a secondary tax on an already suffocating manufacturing sector. 2 p.m., Pak Qatar Family Takaful Limited, dropping annual accounts in Karachi. A massive pulse check to see the solvency of the Islamic risk sector right as the afternoon session heats up. 4 p.m., WorldCall Telecom Limited, meeting for matters other than financials in Lahore, scheduled exactly after the market closes. Telecom towers run on diesel generators when the grid fails. At 520 rupees a liter, telecom operational margins are being wiped out. An after-hours restructuring meeting signals a massive pivot, likely aggressive cost-cutting or emergency infrastructure changes. The institutions are terrified of what this meeting will reveal. Here is your battle plan for Wednesday. Do not trust the quiet. A 466-point green day on low volume means nothing. We are in the eye of the storm. The algorithms can aggressively resume selling the exact second a boardroom reports negative guidance. Watch the risk premiums. Pay close attention to the tape around 10 a.m. If the financial sector begins aggressively pricing in higher industrial risk, the 150,000 floor will be tested immediately. Total cash supremacy. Do not try to pick the absolute bottom. Let the institutions figure out the math. Let the boardrooms digest the 520 rupee diesel reality. We survived the initial crash by sitting in cash, and we will wait in cash until the fundamental picture clears. Protect your armor. Command the Wednesday. Disclaimer: StockSense is an educational platform. I am an analyst, not a financial advisor. The market is facing unprecedented geopolitical volatility. Trade at your own risk.